right, what's going on, everybody? Chris Franks with TexasWest Capital coming at y'all live here just after 11 a.m. Central Standard Time on Wednesday, the 19th of February, 2025. We've got Beards and Bitcoin. We've got my co-host here, Tillman, waiting in the wings. He'll be out in just a minute. Andrew could not join us today. He's got stuff he's taking care of, but we're here to light y'all up, right? Kind of like America did to Canada in hockey there this weekend. So we're here to light y'all up in the same way, hopefully, in terms of Bitcoin, and get y'all excited and get all the nonsense, kind of talk through the nonsense that we hear online as we usually try to do here. And so make sure you guys go ahead and hit the thumbs up, hit the like, hit the subscribe, follow us. You can follow Tillman at TX at Texas OL 61. I've done it so well for so long, man.
And then you listen. It should be rolling off your tongue at this point. It should be second nature. You should be uttering it in your dreams, in your sleep. I can't help you, man. I can't. There's no excuse.
I'm not your wife, man. She can talk about you in such a great. I'll do my best, but it will never compare to how she speaks of you. Okay. Tillman is actually joining us from Canada today, so that's why he's looks like he's in a hotel room because, well,
I am in a hotel room. Yeah.
And so doing the hockey thing. You said, right? You said your son was playing hockey.
Yeah, my son's up here for the Pee Wee International Tournament. It's the biggest Pee Wee tournament in the world. It's pretty phenomenal. He got to play in front of 12,000 people. I'll put it that way as a Pee Wee.
Pretty
so,
awesome,
yeah.
man.
And I will say they put on quite a show. They have so much talent up here. It's the best teams in the world, and it's really fun to see them get to live that experience. And it's also, they've kept it real pure. They have these great little pins, so each team that comes creates a pin for their team. It's kind of like their logo and stuff, and they trade them. And so there's these huge catalogs of pins, because I think this tournament's been going on for 75 years, long time. And people come that have been to all the tournaments with these huge catalogs of all the previous pins, and they no money is exchanged. You're not allowed to buy them. It's all like trading baseball cards.
That's so cool.
So the kids sit around all day trading with other teams and building their pin collection. It's pretty neat.
Very cool. Our fellow Canadian, my favorite Canadian, Mark Chenard, was just curious if you can share what province that you're in. He says Silver Stick.
Quebec.
Quebec. All right, so there you are, guys. And I talked to Tillman, and no, he was at the Suns game, whatever, so he could not attend the U.S. versus Canada hockey game, but he was able to watch it.
Oh man, it was awesome. Gave me chills. I mean, that's about as good of a competitive spirit as I've seen come out in professional sports in a while.
In a while, yeah. I think we're seeing a lot more of that. As we kind of move to the new administration here, I think there's a lot less worrying about being quite so politically correct and more concerned about just getting stuff done. And I think we've missed that a lot, in all areas of our lives. We focused a lot more on, not trying to hurt somebody's feelings more than actually getting the job done. And, I grew up, I'm from the 70s. Gen Xer here, I grew up with the whole life is kind of, you kind of just buckle down and you do what you have to do to get it done, especially if you're a man. And so, yeah, I kind of felt real good after this weekend.
Yeah, I mean, listen, hockey's a violent game. That's why we watch it, and at least that's one of the reasons why I watch it. There's a competitive spirit to it. PK Subban gave an incredible dissertation, kind of on ESPN the other night after the game, and he was talking about how spectators want to see the passion behind the play. It's not enough to just go out on the court, if you will. For example, the NBA, there's a lot of, in my opinion, prima donnas. It's not the same game that it was, back 20 years ago when I was a kid. And I don't care how good somebody is at their craft. If they're not playing with passion, I'm not interested, is the bottom line. And so when you see these hockey games where people are leaving everything they have out on the ice and willing to fight straight out of the gates, because their team was disrespected during the national anthem, it has to evoke emotion if you have any emotion inside of you. So yeah, it's been exciting, tournament. I'm hoping that we don't choke tomorrow, and mess
Yeah.
it all up. But yeah, if we can pull this off, it'll be a beating them on their home turf at their own game would be pretty sweet.
Yeah, yeah. And it's kind of like Bitcoin now, right? I mean, those who really truly believe in Bitcoin are basically the same as the Team USA was against Canada, so it's those who really truly believe in Bitcoin and everybody else. And the range is kind of like that match, right? We're sitting here, they're fighting in the range, and you've got the big Bitcoin believers looking at the overall picture, which is higher for longer, and then you've got a great big group of people who are like, oh no, the top's in, and it's the end of the world, and woe is me, and they kind of remind me of the donkey from what was his name, Eeyore from
Yeah,
Winnie the
you are
Pooh,
from Winnie
right?
the Pooh.
Very
Yeah.
depressive kind of donkey.
Well,
Um,
I think people have gotten addicted to the emotion of the swings that it just depends upon what your prerogative is and what your objective is. The good news from where I'm sitting is that there's a lot of people that are entering Bitcoin that don't want those emotional highs and lows, that are just doing this for the exposure,
yeah,
and for the inflationary hedge that it provides. And that's really encouraging, because they're not going to be paper hands, right? Those
yeah,
people are going to just write it for forever. They don't care if they die and they pass those Bitcoin on to their kids. They don't need the cash. That's not what when they go into putting 1 to 3% of their net worth into something, it, the reason why it's as low as it is because they know that they don't want to be subject to the price when
yeah,
they have to sell. And if you stay in that mentality, it's kind of like what you say at the end of every podcast. Oh, the only thing you can control is how much you lose. Well, that starts with allocation, right?
yeah,
It's not just about how much you lose in a position. It's
exactly.
about how much you expose yourself, to the potential of loss. And so, that's why you see a lot of the meme coin market just exploding and imploding right now, because most of the people that play the meme coin market are of little means, and most of them gamble way too much of their net worth in the market.
Yeah,
It provides them a lot of hope, but the chances, I don't think they go into it understanding what they're up against. I'm fascinated with any type of a market that exists. Like, I'll study any market, and I'm fascinated with the meme coin market right now, specifically because of what Dave Portnoy has done and his voice in the market. But it's I will say this: there's a lot behind the curtain that people don't see. These
yeah,
sniping bots, are seeing these tokens released before you do. And just like, I'm very familiar with automation. Our company builds automation. Um, it can execute quicker than you.
yeah,
It sees things quicker than you. It's monitoring all the time, and then doesn't have to notify anyone to execute when the monitored parameters are met. So all these things are happening in the meme coin space. And when somebody sees on Dex Screener that new meme coin and sees the tweet on Twitter about, hey, this is my next project, it's too late.
yeah,
Like, it's too late for the initial 1000x, the 100x, why people are getting in. You may be able to squeeze 2x, 4x, but you are now playing a game of musical chairs. And I don't know what the game is, but there's this gambling game that people played on social media where it's a rocket ship that's going up, and the rocket ship blows up at a certain point. And as
Okay.
long as you cash out before the rocket ship blows up, then you make money. But if you wait too long, you lose all your money. It's very similar to that. It's like if you get out of the game before they rug pull, then you're going to be pretty happy and you're going to get that adrenaline high and you're going to go back into the market and think that you're a genius and you're going to give it all back.
The market's going to tell you otherwise, right?
Yeah, well, you're gonna give it all back because this is a game that you can't win with your fingers. Is I guess the point.
Yeah, and that's it always reminds me of this thing, right? So I come from a military family. My dad was career Navy. So me growing up, not just as a Gen X child, but as a Gen X child of a
Military.
career military man, right? So I had to be perfect at everything, right? Perfection. And that's god awful in trading. You don't want to come in with that mentality. We come into it, right? And the one thing that hopefully you learn along the way is we tend to overestimate how good we are at things and underestimate how bad we are, right? So we kind of, if we make a mistake, we kind of play it off like, whatever. But if something happens in our favor, we're like, oh God, yes, I am God among men, right?
Well, I figured this thing out. I've cracked the code. This is the perpetual. Even Dave, go back and look at his Twitter thread. He said at like 3 weeks ago when he first found this market, he had a couple of good trades and he posted on there, I could make $5 million a day doing this every day. And guess
Right.
what? He's down $1 million. So
It is. That's what it means to be in the market. And the worst thing that can happen to you coming into any market, whether it's Bitcoin, meme coins, stocks, future, whatever, is you come in and you do well at the beginning. Heaven forbid, because that will convince you that you know what you're doing. And if you really sat back and were honest with yourself, you'd be like, well, I haven't really studied it. I've not been involved in it. I really don't know what the hell I'm doing, right? But our emotions kind of get the worst of us. And that kind of gets us to this point where we're at now, where everybody's freaking out, right? I mean, if we look at it, for the most part, alts have really been going down only about 2 months, 2.5 months now. And so in the grand scheme of things, it's not really that bad, right? So I did this stream, my usual Friday stream, last Friday, where I was talking about how, okay, listen, here's the reality, right? Y'all are upset it's down 50% or 70% from the recent high. But prior to that, it ran up 7,000%, or whatever it was prior to that. And, and if you keep looking back, you'll see all it is a bunch of higher lows and higher highs overall going up, right? Because a market in general, left to its own devices because of money printing, right? Because of devaluation of the currencies, a market left to its own devices, is going to run to the right and up. And
especially when you have a technology that's so new and so unused as a percentage of the population, you're going to have an adoption that feeds that as well, right?
Yeah.
And that's why we see so many people jumping on at so many different levels. There were a lot of articles over the last couple of weeks about companies that have added Bitcoin to their balance sheet, but have done it through the ETFs. And we predicted that. We were excited about that, and we also said that they weren't going to announce it until they had accumulated their position. And guess what? That's what they've done. So it begs the question: how many are accumulating right now during this dip? And what would the price of Bitcoin have been in previous cycles right now? Because I don't think it'd be in the 90s. I think we would have seen a touch in the 60s, maybe even in the 50s, and we may still. But there are so many buyers out there that we don't know about right now that I would anticipate the drawdowns to be quickly gobbled up. And right now I think Bitcoin's biggest complaint from everybody is just the boredom that it's induced in this range that we've found ourselves in. But the range is significant, guys. It's 100K per coin. Like, that's not a small mental block to get over. That's something that we've been talking about in the Bitcoin community since the beginning. They had 100K parties on New Year's Eve, like Michael Saylor's 100K party, And the price of Bitcoin wasn't even 100K then. So that's how big of a, psychological barrier I think this little range that we found ourselves in. And it's going to take it's going to take the macro to move it, and we just have to wait until that macro good news comes out, and Bitcoin will respond to it, and then it'll push past the barrier, and then kind of, in my opinion, reassume the price discovery that it had over the last 6 months.
Yeah, yeah. I mean, I'm in agreement with that. Yeah, the idea that we're topped out, it really doesn't look like it. People are taking some very basic technical analysis. This is always my funny thing. So I've been doing technical analysis of various kinds for just 30 years now. And so somebody will come on and they'll be like, "Oh, well, technical analysis doesn't work. It's astrology for men, and kind of thing." And again, my first thought, I think I've said this before, but my first question is always, well, which technical analysis? First of all, because there's classical charting, there's Elliott wave, there's Wyckoff, there's pivots, there's moving averages. I mean, there's so many different ways, right? So technical analysis is a whole bunch of different things, and they don't all do the exact same thing. Now, done correctly, they kind of lead to the same interim targets, which when I'm teaching over the academy all the time, like on Mondays we'll talk about Wyckoff, on Wednesdays we'll talk about price action, on Thursdays we'll talk about Elliott wave every week. And then even during those, I'll bring up one of the other ones and everybody like, see, look, the same target as what we're looking at here. Because really, as I always say, trading is simple. It's not easy, right? It's simple because really all we're doing is moving through liquidity. So we're moving up into liquidity, we're pulling back into liquidity, we're moving up into liquidity again. That's all we're doing. And that's a pretty simple way to do things. But it's never easy because we always have to deal with their emotions. And the longer we're going sideways, I've said this, we've had multiple opportunities the last few years in this bull market where we've gone sideways for months and months and months on end in Bitcoin. I've talked about it. The longer people go in sideways, because most retail traders have no clue what they're doing. And what's sad is most of those will not admit that they don't know what they're doing.
If you just use technical analysis for your exits, it will add a tremendous amount. Like, okay, so you think it's trying to predict the future. Throw it out, throw all future predictions that you can garner from technical analysis out with the bathwater. Fine, do that. But still, when you're talking about how you set your stop losses, what other tool are you going to use? Like, okay, so if you see a double top and then a major breakdown in structure, are you telling me that's like you're going to go full tilt and acquire a big position right there? Okay, you can. That's very foolish. I wouldn't recommend it. And so to me, technical analysis is just the history of a price action,
Yeah.
and saying, okay, if this trend continues, then I'm going to make money on it. If this
Yeah.
trend breaks, then at least I know when to get out. Like, it's me monitoring it, right?
Yeah.
And the first book I read on it was the John Murphy Technical Analysis for the Financial Markets. And if
Yeah.
you ever, I would highly recommend it. It's an incredible book. But it's like thicker than the Bible.
Yeah.
So back to your point, if technical analysis has left a bad taste in your mouth, try something new, because there's plenty of different strategies out there. It's all about measuring what's happened in the past, though, and it would be no different than this. Is the way I look at technical analysis. Let's say I'm going on a duck hunt, and it's going to cost me a lot of money, and I'm renting a huge lodge out in Arkansas, and I'm bringing a bunch of people in. And I want to kind of plan it to where the best part of the season is. Well, I can just blindly pick during the 2.5 months of the season a week to go, or I can look at the history of the weather during the hunting seasons and try to find the week that has the least probability of snowfall, or freezing temperatures that ruin the pond that I'm hunting. I can also call the duck lodge and say, traditionally, when do you guys kill the most ducks? And it doesn't mean when I go, there isn't going to be an anomaly snowstorm that freezes up everything and I don't kill one duck. But why wouldn't you give the due diligence and the time and the dedication to the craft of trying to predict the best out, or trying to get to the outcome that you desire? And at least if I go on that hunt, having done those things, and I don't kill a duck and it freezes up, I can with good conscience say I didn't go into this recklessly. I didn't go
Yeah.
into this with a reckless mentality. I really tried my best to have a good outcome. I look at it as the same thing with trading. It's like, how much due diligence, how much work are you putting in to the trade that you're making?
Yeah.
And if you consider the work in a trade how much you want it to go up, that isn't work. That's emotion. You see what I'm
Yeah.
saying? So you staying up all night going, go up, go up, go up. You may feel like that's work, but that's not getting you any closer to your target. That's just being a cheerleader on the sidelines for a team that can't hear you.
Yeah. Yeah, exactly. Exactly. And, that just kind of goes in the same thing, we often touch on, which is, you know, people in general tend to not have a lot of follow through. And I say this knowing people are going to feel offended. And my thing is, listen, if you're feeling offended because I said that, look, be honest with yourself, because the odds are you probably are resonating with that, right? But we can look, if everybody had a lot more follow through, we'd have a lot more people who are successful and who feel successful and who feel good about life. Because it won't just happen in one area of your life, right? It'll happen with everything in your life. And so, especially when it comes to trading, it's a skill set. Investing, it's a skill set like anything else. You played collegiate level football, or like big time collegiate level football, University of Texas, right? You're up there at the top. And, you know, without understanding the rules of football and coming in at 5'2", 98 pounds, soaking wet, would you really apply for the offensive guard position on the line, right? You wouldn't, right? You don't know anything about it. You haven't practiced it. You're not the size you need to be, right? You're all these things. But yet people come into the markets every day just because they can. They've got some few bucks and they're of the age that they can get in the market, and they're like, woohoo, let's go. And then on top of it, as we said earlier, they aren't honest with themselves. And it's tough. You make it tough for yourself to make money in the markets. And I guess I'm so passionate about this because trading and investing has given me such a great life, over the last 30 years, but it didn't happen overnight. I was like everybody else, brand new when they first came out, making the same mistakes. I probably made them a lot worse, probably lost a lot more money than most people at the beginning, until I finally sat down one day and I had to be honest with myself. I said, I said, if you keep doing this the way you're doing this, what the hell are you doing? You can't afford to do this. You're going to have to go work for somebody. And I have never been a fan of work for somebody. My dad, growing up, he would always say, listen, son, because he'd come in, he'd be pissed off some days. He had a lot of time in grade. And he'd be like, man, I've got to listen to this brand new L2 that just got out of college and it just joined in, telling me how to do my job. I've got, 15, 20 years here. I'm senior enlisted, NCO here, and I've got to listen to him, but I have to listen to him because I don't have to respect him, but I have to respect his rank. And for some reason, me growing up as a kid, hearing that over and over again really turned me off to this idea of having to listen to people just because they're above me, in whatever position I'm in. So I had to sit down with myself after a few years of losing a stupid amount of money and go, listen, you need to be honest with yourself, get it together, and figure out what you really have to do to be successful, or stop doing the nonsense.
Well, here's the crazy thing about trading that I don't think people appreciate, maybe. Um, there's very few things in life that you can play the real game without consequence. And you can in trading. There's nothing that keeps you from paper trading for 5 years until you hone the craft
Yep.
of trading and feel absolutely confident. And you may have not taken one live trade in that 5 year period and be 90% smarter and better at trading or than 90% of the people out there. You may have gotten to an advanced level of being able to trade and analyze charts and never taken a real live trade. That's an incredible advantage. I don't think, if I think about other areas of life, I can't think of one that gives you that unfettered access to to what it is. Which the show just really isn't.
I had to put that up there. You know,
Listen,
some
Andrew,
people.
I'll tell you one thing. It isn't the same. It's exceptionally better. Okay, so we're not going to go there, Andrew. And I don't appreciate you bailing on us and then having enough time to chime in on the chat. So, I
He
don't
done
know
said
where.
what he said. He done said what he said. All right. Oh man, but no, but yeah, and I think that's really important stuff because we look at it and we go, okay, well, ETFs are having their first down week in what 6 weeks or something like that, right? Basically, since the beginning of the year, down about 415 million. But let's be realistic. The last time it was down was 1, 2, 3, 4, 5, 6 weeks ago. It was only down 57.5 million. And prior to that, I'm looking at this chart here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, at least 12 weeks of up. At one point, up 4.3K on the, so was that 4.3 billion for the week? Another week, 3.5 billion. So, I mean, we've been sideways for a few months here. A little bit
Sailor
of
just
cycling
announced
out.
he's raising $2 billion to buy
Yeah.
more. So we've been in a speedboat for the last 16 years, and we expect the market to react like a speedboat does. These things are cruise ships now, and they don't turn on a dime. They take it, they have a lot of momentum and a lot of critical mass. That's our advantage, right? So it's like a flywheel. Once you get it up to speed, it carries a tremendous amount of momentum and potential, right? That's where we are. And it takes longer than what what we're used to and what we see in the meme coin space. And so I understand it. Listen, the meme coin space over the last 2 weeks has kind of been the hot topic
Yeah.
and drawn a lot of attention from not just the undercarriage of the crypto universe, but presidents. Like in the last 2 months, we've had two presidents launch their own meme coin. I want you to think about that statement. That's insanity. I mean, you would have never predicted that. Well, it tells you that we need to pay attention to that market. It tells you that there is innovation happening at that lower level tier. And it also speaks to where retail has gone in this bull cycle. I don't think this bull cycle is retail driven on the Bitcoin side anymore. I think we're going to see institutions drive the price of Bitcoin from here on out, and that's going to take longer in terms of it's just a slower, less volatile ride than we were used to, and people get bored with it and they start jumping ship. But I will tell you this: I don't think it's a good if you find yourself chasing something because it makes you excited or feels good,
Yeah.
you just realize what that is. It's gambling, and just
Yeah.
peel off enough money to where you get your kicks, but you're not risking a large percentage. You're not going to be, really upset if you lose it all, because there's a high probability if you're going into it with that mentality that you're
That you
going to
will.
lose it all.
And but but that is something, that's a real thing we deal with, right? I mean, if we look at it, even the government promotes, gambling through scratch off and, lotto and all that other stuff, right? And so we've got that there. We've got places like Las Vegas and Atlantic City.
Yeah.
We've got the steamboat in Mississippi and whatnot. The casinos everywhere. We've got and then we've got markets, and crypto markets, especially even now, still are, exorbitantly easy to get into with very little in terms of, of regulation. And so I think it's really bad if you're not paying attention, if you don't understand what's going on, because you're already being suckered into the dopamine fix. The, videos, we went, to Instagram and the shorts and to TikTok now with like, 20-second shots, and people, they, even when it comes to education, it's like, oh my God, the video's over 5 minutes. I'm so bored. And so it's this big, huge thing that you're trying to deal with, and you're coming into the markets without even realizing it is a thing, right?
Yeah, I think the education thing, the piece of it is huge. Bitcoin is a natural educator. The meme coin market, if you get into it and you get rug pulled, it will teach you the difference between Bitcoin and all those other coins. Why do I say that? Well, because Bitcoin's the only coin on the earth that's ever been fairly and equitably distributed. So when you ask yourself, why is this rug pull taking place? It's because it wasn't fairly and equitably distributed. It was minted, and there's large allocations being held by people that may or may not have the same motive as you, may
Yeah.
want a short-term, cash grab versus a long-term movement. And so I do think the biggest issue with meme coins that is gonna have to be addressed immediately, the difference between it and lottery is that we know where the money's going in lottery. We don't know where the money's going in meme coins. So
Yeah.
this Libra token that they launched with the support of the president of Argentina, they launched it. He then deleted the tweet. The market cap went from 4.5 billion down to 30 million, and there was about $800 million extracted in that rug pull. 100 million, 110 million of it is sitting in one wallet that one of the devs is in control of, and he's done multiple interviews this week, one on Dave's show, Dave Portnoy's show, and he's explaining why he's stuck with this $110 million and how he doesn't know what to do with it because it's, quote, not his. And when asked the question, he said, they said, whose is it? He said, it's the Argentinian government's. So I want you to think about that in a period of 4 hours, there was $100 million+ extracted, at the very minimum, $110+ million extracted from the US economy to a foreign economy.
Yeah.
That is an issue. That is a major issue. That is something that will have to be addressed in spades, because there's already significant laws in place that keep that from happening pretty much in every other market. And so, but it also tells you that $4.5 billion market cap, and just like Donald Trump's token, $75 billion market cap can be achieved in a 48-hour,
Yeah.
72-hour window. That's the baby, not the bathwater. So
Yeah.
how do we keep this incredible technology around, but put it inside of rails that actually make sense? But there's so many things that are headline type events that are happening that make Bitcoin that much more of a shining star. The fair and equitable distribution of tokens is very evident in the meme coin space. And then you go back, then you say, okay, well, what's this whole audit talk about? The Fort
Well,
Knox
no.
being
Yeah.
audited. Yeah. Well, whatever happens there's a lesson that's being learned, and the lesson is that unless it's on chain data, you don't know where it is, and you don't get to have a public account or a public record that's visible to all about the sovereign wealth that's in that storage. And so if you have thought to yourself over the last few months, what is all this talk about a sovereign wealth fund and Bitcoin being included? Again, problem. We all think there's gold in Fort Knox. We don't know how much gold, yet we use it as to underpin us as a nation and our mentality as it relates to our wealth and our dollar. How do you go forward with that type of an archaic system that can't be audited instantly from anywhere on the earth versus what we, have essentially got with Bitcoin, where it could be instantly audited from anywhere on the earth, and everyone can really rest well at night knowing that the politicians haven't extracted value that we can't see out of our economy.
Exactly, exactly. I mean, the very fact that, it was only a partial audit in 1954, I believe, was the last time, right? And, I think too many Americans today have gotten used to this idea that
Two
that
seconds.
that's
Keep
been pushed
talking. I'm
on
online.
that's been
Sorry, I
pushed
gotta get.
online that people think that the government that we're subservient to the government, when at the end of the day, the government is there to work for us, which means the things that the government owns are the things that we own. So when we're looking at gold, I mean, you guys should be upset about it. You should be, beating on the walls about this. The fact that we haven't had a real audit of gold in over half a century is absolutely asinine. And you're arguing now, oh, we shouldn't be doing this now, or we're arguing, oh, Doge shouldn't be auditing these departments. They shouldn't be auditing Social Security Administration. They shouldn't be auditing the defense. They shouldn't be auditing. But they're going in, they're finding, listen, there's trillions of dollars unaccounted for, trillions of dollars here, trillions of dollars there, not just once, but over multiple departments, multiple agencies.
Well, if you can't, there's an age-old adage: if you can't measure it, you can't improve it. So an audit is measuring it. It's like, where are we? Where did we think we were? And how do we get to that? Right now, we don't have a clue. It's a black box. And until we have a clue, there's no way to formulate a plan forward. You have to, in order to improve the previous plan, you have to know what the previous plan was and what the outcome of it was.
The same way we do with trading. I tell people all the time, you have to be honest with yourself. If you can't take responsibility for the things that have happened, then there's no way you can. How do you move forward? How do you not continue to repeat the same mistakes that you're making if you don't go, okay, listen, I screwed up. And then you're forced to look back, okay, where did I screw up? What can I change in the future to give me a different result? I mean, it's the exact same thing here. And we get a lot of argument about, Doge shouldn't be doing this, Doge shouldn't be that. But I think it's a bunch of TDS and EDS kind of stuff going on, right? It's a real thing, Trump derangement syndrome. I mean, the government gets out there and says, listen, there's clearly a misuse of funds here to the tune of $1 trillion+ in this agency. And your response is, oh my gosh, they just want to look at your personal financial records. Yeah. I mean, if that's you can have that argument, sure. But if you just completely ignoring the fact that they're finding all this money lost, and you know what? We're looking at the Social Security Administration. And if this is correct, if there is 60 million more people receiving benefits than there are total people in the U.S., not even just eligible for Medicaid, Social Security and whatnot, but the total number, then maybe it's not that the Social Security Administration was going to go bankrupt because of something else. Maybe it was because nobody's been auditing it. Nobody cares about where the money's going, and everybody's got their hands in it. And as a taxpayer, that pisses me off. I hate the fact I have to pay taxes to begin with, but now if you're going to waste my tax dollars and lose it, that pisses me off even more.
Well, there's just there's no accountability and there's no transparency, and those are fundamental things that are required for trust, right? If you're going to trust your politicians, you have to have them accountable, and you have to have them transparent, period. Like that's what. And so I heard it best described like this, and the TDS syndrome and all that I completely agree with and understand. There are people that because Elon has attached himself to the administration, now hate him, and they used to love him. They bought all of his Teslas and thought he was the green, the green champion of the world and all these things. What's interesting to me about that is that somebody on Twitter said it, if before Trump got into office and when you could associate Elon with Trump, if we found out that there was an asteroid heading for Earth and it was going to kill all of human civilization, who would be the unanimous choice by every human being to go solve that problem?
Exactly.
It would be him. And if you can trust him to solve that problem, but you can't trust him to hold people accountable that have never been held to account by sheerly counting the dollars that go into it. I mean, it's just ludicrous. It shines a light on either the TDS that you have and or that you're part of the corruption, that you have something to benefit from that. And if you think about all of the contracts and the money that they've discovered that has gone into the category of like uncategorized, like they don't even know where it went.
Yep.
I can't even imagine how many people are out there that have this little loophole that they only know about, that they're getting federal subsidy from, and we're all sitting around going, where's all this money going? Well, they know where it's going. It's going to them. And,
Yeah.
if it's not going to them, it's being flown over in planes to all sorts of other countries and going somewhere else. But the money doesn't just disappear into thin air. People care about it, and they're hoarding it, and they're spending it. And I think it's pretty clear, if you think about, you can't correlate this directly, but you can indirectly correlate it for sure. If you think about how many politicians make very small wages compared to their net worth,
Yeah.
then you wonder, I wonder if that's part of the money that we're wondering where it goes. And it's not little amounts. When you have a net worth of $100 million and you make a couple of 100,000 a year,
Yeah.
hmm, kind of makes you wonder. And if I had to guess, it's all through, you know, uh, I think it's through contracts for federal subsidy and for jobs that never get done. And it's just looked at as mailbox money. And
Yeah.
there's never any accountability of the job getting done. So no one does it. And so it just sits there being undone, but being paid for. And you can't have that. You couldn't have that in your household. You couldn't have it in a business. You sure as heck can't have it in, any type of a government, state or above, or county or above.
Yeah. And so if that kind of stuff worries you, and hint, hint, it should, right? I mean, it really should. There's little excuse why you aren't buying Bitcoin. Now you can come up here all day long and go, oh, Bitcoin's $96,400 right now. I only have $1,000. So that'll be like just over 1%. That won't even be a whole Bitcoin. So I'm going to go buy this shitcoin over here when shitcoins are getting rugged, 24 hours after they're out, right? It doesn't make a whole lot of sense. If you're concerned about government spending and the things that government's doing and the printing of dollars and all this stuff, and you're not buying Bitcoin, then clearly you're not really concerned about those things you say you are. Or you don't understand enough about Bitcoin. You're letting your emotions get in the way, and you're letting your dollar bias there, your price bias go on. And you convince yourself that, oh, $1,000 of 96 of one Bitcoin, 1% of one Bitcoin is not worth anything. It's not worth it. I'd rather own 12,000% of shit of fart coin or something before it ran up, but here's the sad thing about it. It goes back to what I said earlier. Everybody thinks greater of their ability than what it is. And so people think, well, I'm going to get in on something like fart coin, and I'm going to ride that puppy up 200x, and then I'm going to have all that money. I'm going to get out, and they completely miss it. First of all, probably aren't going to be able to get out at 200K or at 200X, even if they could, even if they wanted to. There wouldn't be enough, liquidity most likely for them, right? Or if it was, it would chase price down really far, really quick. They're not going to get anywhere near what they thought they would. But more importantly is most people aren't realistically are not going to hold the 200X. They'll be lucky if they hold the 2X or 3X.
They'd be better off putting it all on black. At least they've got a 40 something percent chance of doubling up. And it's, but again, it's chasing the rainbow. And, man's been doing that for forever. I think that the interesting thing that we see with Bitcoin is that, again, it's not a retail driven cycle. It's really being our loved in our country.
I didn't mean to get you interrupted what you were saying there.
No, yeah, money, fiat money in particular, is the greatest power control mechanism that's ever been created. And so when you have control of the printing presses, you're able to put people in power and pay them, and keep their loyalty close to you. And unfortunately, that's why government and money always ends up in a bad place. But America's created systems that are supposed to alleviate those circumstances. That's why we have three branches of government, because there's not any concentration of absolute power amongst those three. They have to work in unison with one another. And it's just been so dysfunctional for so long that we're going to have to unwind the mess that we've created. And if you want to just talk about it like as a macro, is, are we being good stewards of the resources that we have as a country? And the answer is no. There's tremendous waste at every level. And I'm here in Canada right now, and so I get to see kind of the other side of um, the coin. And I've been to a lot of different countries, and there's a very socialist feel here. All the buildings look the same. They've pretty much killed ingenuity and creativity apart from the arts, because capitalism is looked at as bad, as something that's a selfish endeavor instead of a group, good for the group. There's some truth to that. But the problem with that mentality is that you create a class of people that aren't driven. They're not trying to find the next answer. The problem is present, but there's no one that, as an individual, has enough conviction and enough gumption that they go, I'm going to solve that problem, and I'm going to create a business that's around solving that problem so that I can make a lot of money. Because the bigger the problem that you solve for more and more people, the more you can charge for that solution and the more money you make. If so, you cannot have, there's not a perfect answer here. The question is, how can we govern ourselves in the United States in a way that continues to make us the most inventive country in the world that's ever existed in the world, that drives people to push and to be motivated. It's like that hockey game, that we're all passionate about whatever the heck we put our hand to, because there's endless opportunity to be the best. And I'll give you a good example of that. You can start as a trash man in this country, and you can see a need in that market, and you can say, I'm going to start a better trash company. There's all this furniture that's being left on my that we can't pick up as a municipal trash man. And that problem of every time you drive past a house and there's an office chair, a desk that you can't put in the compactor, and guess what? Two guys in a truck, or college hunks, or any of the variation of these trash pickup services for things that the municipalities won't pick up. We're born out of that necessity, and they're billion-dollar enterprises now. You can make money doing anything in this country as long as you're the best at it. And that is what we have to preserve. And so the question is are we being the best at governing ourselves within our government and spending the adequate amount of money to solve problems, but not a dollar more, right?
Yeah.
We don't even think about it like that anymore. It's like it's somebody else's problem, and we're not going to be accountable for the solution. That's a very, very serious a change in mentality that I do not think is good for the world or our country as a whole. I think we always should be the people that say, "Oh, we're going to fix this problem. We're going to figure out a way that's better. We're going to solve it in a way that hasn't been looked at before, and we're going to measure the outcome. And if we're wrong, we're going to correct course and go at it again. And we're never going to give up until we fix the problem, because there isn't a problem out there that can't be fixed if given the time and attention and the resources, right?"
Yeah, but like you said, it's all about accountability. You can't, it's like what I was saying earlier. Unless you admit that you've made mistakes, you can't go back and figure out what you need to change in the future so you can make better decisions. Without accountability, you're just throwing money at something. That's what we've had for so long a time. Not just Democrats, but Republicans as well. Throwing money, just throwing money, making money available, but no accountability to it. Again, when we look at, I think one of the big things they found was Doge found was when they were looking at defense spending, and there was the little checkbox that said, where basically they weren't telling what it was for, right? It was just basically a miscellaneous type thing, but it just trillions and trillions of dollars in there with no way to trace that, or very little way to trace that and figure out what's going on. So there's no accountability, right? If you're in Bitcoin, you won don't trust people to be accountable. So that's why you're in Bitcoin. Oh, excuse me, hiccups here, Bitcoin. Or two, you believe in the accountability and you want to make sure that your money is in something that you can check at any time and place and know how much you have, how much is available, how much is going where, and what is, because it's all on chain, right? So, I think if you're getting into Bitcoin, you're a different type of person. You're a person, whether you recognize it or not, that wants these things.
Mm-hmm.
And so I think when you figure that out, it kind of colors the way in which you look at other things that are going on in the world. When you actually figure it out, when you're honest with yourself about why you're in Bitcoin, what does it really mean? Yeah, I talk to people about trading all the time, every day, right? I don't know, go figure. That's what we do. And one question I like to ask really is, so why are you in trading?
Mm-hmm.
And 99,999 times out of 100,000, they will say to make money.
Yep.
Well, okay, yeah, it's to make money, but for what reason? Money is not the end goal. To have a big Scrooge McDuck kind of thing of money that you can dive and swim through, which would be absolutely nasty. I'm just saying, is not the end goal, right? It's what does that money do for you?
Well, my
You pay your bill, time, right?
response to them is there's easier ways to make money. If your game is just to make money, trading is not for you, because
Yeah.
there's easier ways to make money. And let me tell you, if I go, and I'll give you a good example of this. If I go trade my time for money, I can't lose.
Yeah.
I'm guaranteed to make money. That's easier, I can assure you, because if you're in a bad situation financially and you're going into being trying to convince yourself that you want to be a trader to make money, you're going to end up in a worse situation than when
Yeah.
you started, because you can trade lots of hours and go negative. You're paying other people for your education as a trader, and so you can't go into it without a mentality of, I have a lot to learn, I want to learn it, and it's going to cost me money to learn it, just like it costs you money to learn anything in life. There's an educational process. And so I think the simplest thing to do as an investor is to find something that you are proud to own and that you believe has an exceptionally long time horizon. And if you look at crypto, there's only one clear winner there, right? The Bitcoin is been number one, will be number one. It's being adopted at an institutional and government rate that no other coin is even close to. The ETFs have more inflows than vast majority of the inflows. Like, you just look at all these signals and you go, there's a lot of smart people that are that have chosen this to be the leader. Um, do you have any exposure to that? Because it takes no education, no monitoring, no nothing personally that's going to change your way of life. If you just dollar cost average or use our software at Arch Public to set it and forget it and accumulate Bitcoin over long periods of time at very small intervals, you can set yourself up for a very stress-free trading experience. And you can call yourself at the end of, if you buy Bitcoin today and you hold it for 10 years and you sell it at the price that it will be in 10 years, you can call yourself a successful trader. It'll be boring. And it won't give you the emotional highs that going out and buying lottery tickets
The
will,
dopamine. Yeah.
but you'll be successful at it. So it's about how quickly you want to extract money from the market. The more quickly you want to do it, the more risks involved. That's
Absolutely.
period, the end. Like, so if you're looking at 10-year windows, you're pretty safe. Buy anything, and just through inflationary powers, 10 years from now, likely chance that it's going to be more expensive than it is today. Just like everything today is more expensive than it was 10 years ago. But the question then becomes, okay, what asset do I really believe in? And so if you're resonating with any of the things that we're talking about as it pertains to transparency, as it pertains to accountability, as it pertains to fair and equitable distribution, as it pertains to the potential of what it could go to, there is no ceiling on Bitcoin. Bitcoin could go to infinity dollars per coin. It could absorb the entire, there is no cap. Whereas if you look at the real estate market, there's a physical cap. You can't invent new land. You cannot, and so there's this cost cap that's attached to pretty much everything that has a physical nature to it. Bitcoin doesn't have that. It
Yeah.
literally has 8 zeros behind the decimal, and those can continue to go up to where we may be paying $100 a sat in the future, some distant future that we can't see right now. So when you're thinking about, okay, do I have exposure? Do I believe in this overall arching narrative? Do I see a history of performance? Do I see upside potential? Those are the recipe for success. And just be boring about it. Just
Yeah.
put a little bit in there and forget about it. If you put $100 in Bitcoin today, you're not going to worry about it if it goes down to 60,000, 70,000. It's inconsequential to your livelihood.
Yeah, and here's the thing. If you need something to make life more interesting, because you're investing in your trading should not, it should be boring. You should not get depressive. You should not get euphoric with it, because that means, hey, listen, that's your body telling you, pay attention because you're on a dopamine fix here. And that's what you're running after, which means you're going to make bad decisions, right? So something else Tillman was talking about earlier, which is basically figure out what you could do, where the issue is, find out where the challenge is in anything in life, in anything in business, right? And build that bridge to it. For me, my thing was, the big issue with traders is that they don't understand how and why markets move the way they do. That's the big thing of what we teach. Yes, we teach you LA Wave, we teach you Wyckoff, we teach you price action, but all of that are to teach them as tools to help you understand how and why markets move like they do. And once you actually understand that and you can identify that, then every trading system out there becomes infinitely or exponentially better, because you start understanding when you should take the trade and when you most likely shouldn't. Tillman and Andrew started their company, Arch Public, with this idea that, listen, emotions are a big hindrance to people in markets. So let's develop a way in which people can get into the markets without without their emotions being the driving force behind it. And so
We're
they
our
created
own
this
worst
algorithm.
enemy as traders, right? And so if you can remove yourself from the equation, it makes a huge difference. And it's very similar. I'll draw an analogy to being a police officer. I have a lot of police officer friends, and I love talking to them and picking their brain. And one thing I can tell you about them is they're all striving for a neutral emotional state. That is the goal. They know they make the best decisions in high stress environments if they have no emotion in that environment. Same thing with soldiers. And so when you're a trader, the training that you do before you're in the trade is how is what is the he one of the police officer friends of mine says, always going to resort to your highest level of training, right? So if you have no training and you're in a highly stressful trade, you're going to make the worst decisions
Yeah.
because you're going to resort to the highest level of training that you have, and you have none. So that's a zero. You're going to be a real big L on that. If you are training yourself to not be emotional and to not take the market personally. A lot of times in my youth, I'd enter a position oversized
Mm-hmm.
at a price,
Yep.
expecting it to go up from that moment and going forward. And I got offended when the market didn't give me a big margin of cushion on that
Immediately.
trade immediately. Like,
Yeah.
by God, I entered here. You should give me 20% to work with on top of that. Instead, it takes 20% away from your position, and you're left going, what does
Yeah.
the market think it's doing? Like, who does he think it's messing with? That is the source of a lot of problems that have that I've had to get away from. And that's that emotion where I take what the market's giving me personally. The market doesn't care about you. It doesn't think about you. It doesn't know what your position is. It doesn't know what your price entry is. It's only, like Chris says, it's seeking out the greatest liquidity pockets that it can seek out. And if you made a bet at a liquidity pocket that dried up, guess what? It's going to a new liquidity pocket, and it may be up or it may be down.
Yeah.
You don't know which one until it does it. And that's where you have to say, oh, okay, do I believe in the core asset that I own? Did I take a proper allocation to begin with, or am I overextended? And if you've done the due diligence and you've kept your emotions in check throughout all of the process, likelihood is that you can ride that position out. It's not a big worry to you, and you believe in the underlying asset so much that you're looking at it as a discount and you're accumulating a little bit more. Like, it's a complete, it's all between your ears. It has nothing to do with really what's happening in real life.
Yeah, no, and I'm glad that I think I'm really excited that we're kind of ending on that point there, which is, emotions are a part of it. And if you look at the most stressful occupations, things like military, things like law enforcement, where this is understood and they practice, right? They've got a plan, deal with the plan because the emotions are going to be there regardless. And there's no way for them to automate what they're doing, right?
No.
So at least in trading, you can automate here. But even if you choose not to automate, your emotions are still going to be in there. So you have to understand. You have to understand what's triggering those emotions. You have to be able to understand that when they come up, how to recognize that they're happening. And then you have to have a plan in place that you've practiced over and over again. So that way, when the emotions do come up and you notice them and you're not going to become emotionalist, because we don't do that. We're human beings. We have emotions, period, end of sentence, unless you're a sociopath. And I'm not even kidding about it. It is the way it is, right? Sociopaths lack the emotional connection. But you need to have this understanding of all that and the plan in place. So that way you don't have to rely on your emotions. You go, here come my emotions. I know they're coming to do this. In this situation, I need to do this. And you just follow your plan and do that. It still doesn't guarantee that you're going to do it because, again, we're emotional, best laid plans and all, right? But if you want to, have some success, if you want to have a greater chance of success, understand that trading, just like in the military, just like in law enforcement, is very emotionally driven.
Yep.
And you have to practice and you have to have a plan to deal with those emotions when they happen. And, if you absolutely cannot and you don't want to, the absolute best thing you can do is get some sort of automated strategy, like
Yeah.
what Arch Public does to do that.
Yeah. Trading with automation is not emotional because it's happening without your daily or your moment by moment involvement, and it is a tremendous, I will tell you this, just having automated strategies running. We have a lot of clients, and some of them like to watch the charts when the automation enters, and they choose to ride the emotion. But what's really, really interesting is that we'll get calls from those people, and they'll go, "Well, why did the strategy enter at this level? And that, man, I need to do that." And you can literally hear the emotion in their voice. And by the end of the day, the trade would have either continued negative and the stop loss took you out, or it reversed and ended up positive. And guess what? They had no clue which one was going to happen. And when you're making the emotional decision at that time, most of them would
Yep.
exit at a loss. And so if you leave it to yourself, you're tied into those decisions in real time. Whereas if you checked it at the end of the day, there's a large likelihood and there's a large percentage based upon historical performance that the price recovers. Why? Well, because you can't predict what the price is going to do the next bar. But if you have a good indication as to what the general trend is, and if other markets are moving that are correlated in an upward trajectory over long periods of time, waiting it out takes discipline and takes emotion, unless you have somebody else doing it for you or you have an automated tool that's doing it for you. And that's why I think just trying our software, and that's why we've made it free. If you want to use our software to trade $10,000 of Bitcoin, per year. It is of no cost to you. You can download it. You can call us. We'll teach you how to use it. You can set your own parameters up. It's an incredible way to show you how emotional you are, because even I am emotional and I know all that I know about automation, and you cannot remove yourself from it. And it's no different than anything else in life. Like when you love something, when you care about it, it makes you emotional about it. And guess what? We all care about our money. And so
Yeah.
you can't help, but you can't unhinge those. What you can do though, is you can come up with a strategy to remove the emotion and remove your ability to act on the emotion in a moment's notice. And it would be no different than, let's just say you owned a house, right? And you find out that, golly, I need a new roof. Well, if it was easy as pushing a button and you could sell your house, be in another house, not do any paperwork, and all your furniture moved over, you'd do it every time. You would remove the burden of the current situation, and you would go to a situation that does not have the burden. Unfortunately for us, that it's really a big pain in the butt to move, and to do it in real estate. But in trading, it's not. It's the push of a button.
Yep.
So when those things come up, where in the proverbial, trading world, you need a new roof, you typically push the button, is the point.
Yeah. Yeah.
Get,
Exactly.
get me
Exactly.
out of
So,
this.
so right before we go, man, one more question. FTX. So we've got the certain bit of creditors that are under $50,000, 50,000 or under, started receiving payments, I guess, yesterday through Kraken. So what do you think, man? The big question I keep getting is, does the money go back into the markets, or do people just put it in their pocket and go, thank God I got something back. I'm never coming back to this stupid crypto crap again. Screw them. What do you think, man?
I would guess, the venture to guess, that the vast majority of it goes back into the market. And here would be my only logic behind it. If you were in the FTX debacle, you've been in the crypto market when it was not cool to be in the crypto market, when you were persecuted and called an idiot, and it wasn't really the mainstream. But Wall Street wasn't on board back then, is the point. And so if you drank the Kool-Aid back then, I kind of think it's like the Matrix pill. There's no going back. Once you've seen behind the curtain, you've seen behind the curtain. I would venture to guess that the vast majority of them are going to put it back into the market. I do think that they will have a very serious question as it pertains to custodianship, and that who's going to custody my Bitcoin. And I do think it will push a lot of people to cold storage that otherwise, they're going to be slower to chase yield than we are,
Yeah.
because they've been burned by chasing yield.
Lessons, man. The hardest ones learned are the ones that you learned, because it happened, right? You can
Yeah.
learn from books all day long, but it'll really stick when it happens to you, and
Well,
make
and
you
ask
tough.
yourself the questions, like, when you're chasing yield, who's done this before, and how long did it last? Because we were talking about it offline. There's been not just FTX, but Celsius. There's just been a
Voyager, yeah,
litany, yeah, of failures. And FTX was a unique one. Most of them were caused by unsustainable models, like paying out yield that you couldn't pay out long term, and getting caught in a downturn, and
yep,
the house of cards collapsing. So if it
yeah,
hasn't been done in the TradFi space, and it's being done in the crypto space at a disproportionate reward to risk profile, you need to ask yourself, how long is this going to last?
yeah. Make some money with it while you can, but understand if it's been going for a bit, you're probably a lot closer to the ending that you don't want than the ending that you want. So,
Yeah.
yeah, I mean, Mark's bringing up Quadriga there, or whatever it was called in Canada, where the CEO died randomly, and he had the passcode for the keys or whatever, and it was hundreds of millions of dollars locked up in there.
Never to be returned to the market.
It's crazy, guys. So you got to be careful out there at the end of the day. Again, if you're in the markets, it should only be what you can afford to lose. I mean, period, end of sentence. You can be a little bit more aggressive for something that you really, really believe in. But if you're getting to the point where if you lose it, you're hurting, then you are way too overexposed. And if your response to that is, well, if I don't put that much in, then it's going to take me 25 years to get where I want instead of 5 years. Well, look at your issue. Your issue isn't that situation. Your issue is how you're looking at that situation. It's your emotions. And again, emotions are going to lose you money in the markets.
And if you're ignoring people that love you's advice and hiding, accumulating your position, you've drank the Kool-Aid too much. Like if your wife is telling you we own enough Bitcoin and you're secretly buying it behind her back, I would tell you that you're buying emotionally. You know, there's wisdom in a multitude of people, and if you can't defend your buying strategy in public forum, chances are it's not a good one.
Words to live by there. So that'll do it, guys, man. Appreciate you taking some time out of your Canadian trip there, Mr. Holloway, to join us.
Fun.
Other people were stateside, decided they were too busy. No, kidding.
Andrew's having a baby on Friday. He's doing doctor's visits and all that stuff. So we need to keep him in our prayers and wish them easy and joyful weekend, because it'll be a big one.
Yeah. That's right. Welcome another life into the world, right?
Yep.
So that'll do it. As always, remember, the only thing you control is how much you lose. So if you're in the markets and just keep working on the risk management, it'll get you the best return on anything else you do. It's not about, again, if you're looking at the markets as how much profit can I make rather than understanding it's a game of losing and saying how much can I minimize my losses, you're doing it wrong. And you're going to find that out because you're going to find that you're in a consistently losing pattern. So check out Tillman and Andrew. Follow them there on X. Follow me on X there. It's underneath the video as always. Also, check out their company at archpublic.com. Check us out at TexasWestCapital.com. Either one of us, we'd love to have you in. Both of us, we'd love to have you in. But do what you need to do for you and make sure that, you're taking it seriously. Don't look at the markets as this, oh, well, hey, I got a few bucks. I'm just going to jump in there and let's see what happens. Because what's going to happen is what you would normally think is going to happen. And that is you're going to go cry about how much you lost. So take it seriously. You're adults. You're entering an adult market. You're using money that you should be respecting because it cost you some form of time, effort, thing that you had to do, guys, to get it. I don't think there's enough people out there really respecting their money. And that makes it easy to throw it into nonsense and, and gamble it. And then, be upset about it afterwards. So there we go, Tillman. Y'all have a safe trip. Good luck to your son over there. And I guess next week you'll be back home. So we'll see you in Colorado.
Yep, I'll be back.
All right. And we'll see Andrew. And hopefully Andrew will have some great happy smiles and maybe some tired eyes and all that.
That's exactly right. Well. Yeah, that's what we should expect.
All right. Everybody else, as usual, just take care. Be safe out there. And again, if you're in the markets, if there's one thing you get from us, even if you don't believe the whole Bitcoin thing, just if you're in the markets, take it seriously. Understand it's a game of losing, and he who loses best wins. So, work on shrinking how much you lose. And if you've got a decent enough strategy, the profits will take care of themselves. All right. Take care, Andrew. If you're listening in, we'll make sure you're here next week. No excuses. Tillman, I'll see you next week, man. And we'll see the rest of y'all again next Wednesday, 11 a.m. Central, 12 p.m. Eastern. Take care, everybody. Goodbye.